All right. Hello, everybody. Welcome back to another episode of the Market Close. The snow has loosened up a little bit here on the Northeast. It has finally stopped snowing after like 4 hours. Unfortunately, the red in the stock market has not stopped since I left early in the morning. S&P 500, 681. I think the lowest we got to was 680 today, so you got a little bit of a bounce, but nothing that nice. Down 1.16% on the day. CrowdStrike is down 10%. We got a lot of headlines to talk about. DoorDash is down 6%. NVIDIA survived the day, basically flat. SoFi, it got to below 18. Now it's at 1830, still down about 3.6%. SanDisk, actually good day. GameStop, decent day. Nebius, your hyperscalers, or sorry, I should say your neoclouds are doing okay. Your hyperscalers are actually not doing okay. Microsoft, they took her to 383 today. Basically at the lows right now. I mean, it's a bit disgusting. And then we don't even want to talk about software. Duolingo down 5%, Reddit down 6%, Rubrik down 6%, Adobe down 5%, HIMS, which has earnings today. We'll talk about that. That's flat. TSM down 0.5%, Amazon down 2.4%, Google down 1%, Meta was pushing 660 on Friday, 636, that's down 3%. Novo had some bad trial results compared to Zepbound, that's down 17%. UNH is down 3%. IGV hit a bottom for the year, or at least hit a low for the year. Maybe it's the bottom, maybe it's not. IGV down another 5% on the day. I mean, it's just been an ugly day. There's been certain sectors that have been okay and have kind of survived. Like drones today have not been the worst. Energy has been doing okay. Bloom Energy, that stock's doing decent. But that one actually doing very well, up 8%. But tech and software and fintech has been hit. PayPal, rumors of an acquisition, no buyer, no amount on the price. That stock was at up 5.9%. Looks like it's going to close up about 6% of the day, which is nice to see for PayPal. But I mean, realistically, it's been an ugly day. It's been a very, very ugly day. Now, why has it been so ugly? You might be asking, is it just another day in the stock market for 2026 for things to go down? Like, what exactly are we dealing with here? The reason, which I'm starting to believe is actually the real reason, which we talked about last night, we talked about this morning. I think it's the Citrini Substack article. This is the Wall Street Journal headline, the viral Citrini Substack post that's sparkling new AI worries on Wall Street. And it's not just the Wall Street Journal, and it's not just the Trump 15% tariffs, which also might have created a lot of pain today in terms of the market's reaction to it. But Bloomberg, multiple business media outlets are running with this headline that this article, this Substack, which envisioned a world in 2028 where the S&P 500 is down 40% and unemployment is up 10%, basically making the premise that AI is so good it could actually cannibalize the entire economy. All it was a simple idea around, hey, what if things are too good that things go bad? It wasn't a prediction or anything. It was just a projection of what could happen, another perspective out there. And it's almost like the algorithms read into that perspective and got mad about it, particularly in that Substack post talks about stablecoins commoditizing payment processors. Well, guess what? The reason the payment processors are down, I think, is because of that reason. MasterCard below 500 today, down 7%. Visa down about 4% right there, 4.5%. And then you had American Express that also took a hit, down 7.4%. You had DoorDash and Uber Eats that were specifically called out in that article as well. DoorDash down 6%. In fact, I was reading some tweets today by some fund managers that they're like junior level traders inside of a fund. And they were tweeting that their bosses sent that article to them with the subject line, must read email to all 50 of the traders in one of the macro funds that's in New York. The guy was just tweeting about it. And I was like, wow, this article went that viral that you've got fund managers sending it to their junior traders inside of these macro funds, and they want them to read and sort of understand what the perspective of this is like. I really didn't think this article going viral would cause the sell-off, but it kind of does feel like this article going viral is causing the sell-off. And, maybe we're going to look back at this and laugh, because at the end of the day, it's just an article that's projecting something that could happen. It's not necessarily like saying, yes, this is going to happen, but it is a thought piece, and that thought piece has gone viral. Tesla right there below 400, Netflix down 4%. Oracle did fall below 140. It's at 140.7 right now, but did hit 138. It's kind of crazy. Not only that, though, you had Anthropic come out, and, their next target to basically say, hey, that stock's going down because we're trying to do what they're doing is none other than IBM.
Space and all these critical earnings that are coming this week. Right. And then we look up and we see IBM off 10% last I looked.
Yeah, the market remains hypersensitive, Scott, to any of these updates from Anthropic and OpenAI. This time, as you point out, IBM now at the lows of the day, down about 11% after yet another tool is released by Anthropic's Cloud Code, this time aiming to modernize decades-old mainframe systems that were built on COBOL. That's the common business-oriented language, a task carried out by companies like an IBM, an Accenture, a Cognizant. Meantime, cybersecurity names under pressure despite CEOs challenging the AI narrative. We had CrowdStrike CEO George Kurtz saying, let's stay grounded in reality. This AI tool will not replace our Falcon system. Other experts adding that Claude's tool may be able to identify bugs and suggest fixes, but that's just one of many capabilities that are.
So Claude came out today and they said, hey, we have a process that can streamline COBOL. Now, I'm not going to try to act like I knew what the hell COBOL was, but I learned about it today. Common business-oriented language, a programming language from 1959. It's pretty cool, I guess. I was like, COBOL? Or are we talking about like, or mining for cobalt? Like, what are we talking about? But essentially, Claude can streamline COBOL, and IBM was one of the core companies that was involved with creating COBOL, down 10% as soon as this announcement came out. I mean, this is becoming comical. This is legit becoming comical. I think I haven't looked at IBM in 30 minutes. Let's see where it is right now. IBM, how bad is it? Oh my goodness, 14% down. Largest drop since October 2010. Wow. My dad used COBOL. Yeah, dude, I'm not gonna lie. I had no idea. I was like, COBOL, why is this so important? But apparently it is for IBM. And, is this like, is this a death wish for IBM now that Claude is getting into it? I'm not smart enough to necessarily understand why. I don't know if it's worth taking 14% off the business. The largest drop since October 2000. Are you kidding me? But yeah, that's what we're seeing right here. And, IBM was actually doing well earlier in the year. It was actually doing well, really well back in 2025. Completely has turned around and it has taken a hit. And I think rather than, IBM in particular going down, what's more interesting to me is that it's like the market is on tilt on any sector or industry. By the way, Accenture, which also works with Cobalt, got hit pretty bad. Accenture down 7% on the day. Cognizant got to hit. Like all these different stocks that are part of these different sectors that could be affected, just like cybersecurity could be affected. I don't think it actually will necessarily, but CrowdStrike wiped out 10% today of its value. Same thing with Palo Alto getting hit pretty hard. Palo Alto down 4%. Like, it's ugly. And it goes to show that this AI narrative of taking away many parts of the economy is starting to come to fruition, at least from the perception of the stock market. Will it be reality? Time will tell. But as of now, it's not the best. Cybersecurity stocks getting hit the hardest, the worst since March 2020. Bug is one of the ETFs for that. BUG, there you go, down 5.4% on the day. So we got two earnings after the bell. We have HIMS and we have Kratos. Let me know in the chat if anyone owns these names. Kratos right here down about 1% of the day, a little bit of recovery from the 91 lows. HIMS has just been hit so hard across the past 3 weeks. The stock year to date is down 53%. Don't have a position in any of these companies. I do think if there were to be a bounce today, it would happen from HIMS just having somewhat decent numbers. I mean, like how much lower is it going? Or are we seeing this thing below $10? I don't know. Now, Kratos is in a different story. Kratos is actually up a lot over the past year. Yeah, Kratos is up almost 300%. So I'm not sure about the valuation of this company, but I would imagine they would have to put up some really good numbers to not get hit hard. It's up 20% year to date. I think Kratos is probably going to have a better fundamental story going to earnings, especially because they're in the right sector when it comes to defense and drones. HIMS has just been pummeled every other week because it's in a pretty bad sector with really bad headlines. And, well, I think the market's now going to have to ask themselves, do you want to take this thing down from 4 times price of sales to 2 times price of sales, or how bad do we want to get? So we'll keep an eye on those earnings right at the bell. But it's another day of a software apocalypse. Yes, HIMS is also sold 34% short as well. And unfortunately, although I don't think the software apocalypse is justified, it doesn't matter what I think. It doesn't matter what any of us think. The market right now is pricing this in as a real threat. S&P right there down 1.2. And remember, for those people comparing it to DeepSeek, DeepSeek was over in a couple days, meaning NVIDIA didn't entirely recover in a couple days, but the extent of the pain of DeepSeek was like about a week. And then you started making recovery. Then obviously you had the whole Liberations Day stuff, which ended up crashing the whole market. but it wasn't like the general anxiety around DeepSeek lasted for maybe 2 weeks. This has been going on for about a month and a half now. This whole software drama with Anthropic, and it's getting worse every week as Anthropic introduces new ideas. And I guess that's creating pain. And as a result, I think the market's going to have to try to figure out how exactly they want to price that in. As you can see right here on this chart, software stocks are getting crushed at their highest levels since 2008. The IGV is now on its key for its worst sector since 2008, down about 20%. It's quite incredible to see how this is playing out, but nonetheless, this is happening in front of us. House Speaker Mike Johnson said Congress is unlikely to find consensus to codify Trump's tariff agenda after the Supreme Court struck down the administration's sweeping levies. That's from Politico. Trump, by the way, pissed off the entire day. He was at an event to talk to families who had their loved ones killed by illegal immigrants, and he started going on a rant about Mamdani, started talking about the Supreme Court justices, started talking about his poll ratings. I mean, he was kind of going all over the place. And then he tweeted this in the morning that any country that wants to play games with a ridiculous Supreme Court decision, he's lowering the S and the C on Supreme Court to prove that he doesn't respect them. And he explicitly said that in a previous tweet. Especially those that have ripped off the UFC for years will have to be aware of new consequences. Buyer beware. So you got Anthropic destroying software. You got Trump crashing out. And you got the market that has no idea what to do before NVIDIA earnings, as NVIDIA is actually green on the day as the S&P's. I mean, when's the last time NVIDIA was green on the day and the S&P was down 1%? That usually doesn't happen. Usually the S&P falls 1%, NVIDIA falls with it. I kind of think this is also another reason the Citrini article is going viral, because the thesis of that article was buy NVIDIA. The thesis of that article was you have to buy AI. That is the only place to stay safe, even though the doomeristic narrative is that if the entire market collapses, the economy collapses, no amount of NVIDIA stock is going to save you. But it feels like that's the only thing that's been holding up in the face of all this pain, simply because of the idea that every incremental dollar of AI will end up going to NVIDIA. Tesla obviously trades at a very high multiple. Tesla also got hit today, getting a little bit of a bounce right there. There's that green candle right into the close, but it did fall to 394. Wow, is Tesla going to 400 right here? Huh, right at the close. Let's see if it can crack 400. 394 to 399. I don't see any specific Tesla headline, but looks like people are buying it up right before we get into the close. By the way, in an analysis from NVIDIA earnings over the past 11 quarters, the average move is only 4%. So I think the implied move is about 8 to 9% on Wednesday, but the average move is 4%. The last time we had a really big move was February 2024, when the stock was up 16%. And then to go further from that, you have to go to May of 23 when the stock was up 24% after earnings. So realistically, I don't think we should expect too much. Average is plus 4%, but on Wednesday, we will get those NVIDIA earnings and hopefully we'll get a better understanding of what ends up happening. All right, Hims, what did you guys say in the chat? Again, I used to own Hims a while ago, bought at 53, ended up selling at 58 after 5 months of holding, so it wasn't really a great gain. But obviously from protecting to the downside, it was a decent sell at the time. Hims right here, 1549. The chat says 68. Wow, 70-30 dump on a stock that's already down 50% this year. 70% of you are saying it's going lower. All right, we're going to see. We're going to see. I think Hims gets the results pretty quickly. If not, we're going to have to wait till 4:05, but we should get these numbers pretty soon. Kratos as well. That's another big one. And then we might have a guest join in about 20 minutes as well to give their thoughts about the market. But let's get through these two earnings. We had a couple of their headlines. And then we will end out a Monday. We will end out a Monday in the stock market. Floyd Mayweather Jr. versus Manny Pacquiao II is expected to take place in September at the Las Vegas Sphere. What is going on? What is happening on the planet? What is going on anymore? Monday, February 23rd, 4 p.m. The stock market is now closed. All right, we are done. We are done for the day. S&P closes 1%. Do we already have Kratos earnings? That was quick. I think we got Kratos already. Do we already have Kratos? Kratos is getting a little dump right there, down 5%. Wow, that was quick, dude. That was like within milliseconds. Kratos down 6%. It looks like 18 cents versus 16 cents on EPS. That's a beat. Revenue, it looks like they beat. I'm trying to get the exact numbers here. Hims, by the way, the street wants 5 cents and 617 million. The street wants 5 cents and 617 million. Kratos down 5%. Hims up about 1%. Hims getting a little bit of a pump. Don't have the numbers yet. Nope. Now Hims going red. Now Hims going red. Still don't have these Kratos numbers, but it looks like it might be getting hit. If my mic is low, refresh your screen. If my mic is low, refresh your screen. I don't think it's my mic. If it is, then a bunch of people can let me know. I can increase the volume on my mic, but it might be just a refresh. Okay, Hims flat, Kratos down 5. Kratos fourth quarter adjusted EBITDA 34 million versus 32.4. Looks like they beat on that metric. I'm trying to get this revenue number and see what we're at. I think the revenue guide missed by a couple basis points, which is why the stock might be selling off right here. Kratos, they also won them and GE won an aerospace Air Force award today. It was worth about 12.4 million. So that happened in the morning with Kratos. No, I don't see the earnings yet. Still look. Okay, I think we got it. Okay, so revenue 345 versus 327. That's a beat. Adjusted EBITDA 34 versus 32. That's a beat. EPS 18 cents versus 16 cents. That's a beat. Looks like the guide is a little bit lower for the fiscal year 2026 route. It looks like the street wanted 1.65. They came in at 1.6 billion. Kratos right there down 6.4%. Hims is down 0.5%, but we don't have the numbers yet. Kratos is getting hit right here. I mean, it's a triple beat though. Adjusted EBITDA, revenue, and EPS. It looks like the guide is the only thing the street might be upset about. Outside of that, it looks relatively decent. I don't know why it's down 6%. I mean, it was up 20% for the year, so that's fair. But Kratos right there down 5.3. Let's see if Ondas getting affected by that. Ondas flat after hours, red cap also flat. Bed Bath & Beyond had earnings today. I forgot these guys were public. BBBY, that stock is up 3%. They beat on EPS by 27%. They only lost 16 cents. Street thought they would lose 22 cents. Revenue, they beat by 4%, 273 versus 263. Bed Bath & Beyond is green. Hims is up 1%. We should be getting the numbers at 4:05. So in about 2 minutes, we should see what this looks like. Trump admin exploring options to build on Trump accounts 401k. Executive order by creating new retirement saving plan. Okay, by the way, the Trump accounts for kids, about 3 million of them have already been signed up. And Brad Gerstner is targeting about 15 million by the end of the summer. So you did have a decent amount of people already signed up for those Trump accounts, which is a good thing. All right, we should be getting Hims in about 2 minutes. See what ends up happening. The rest of the market, by the way, here's how we ended out. IGV was down 4.7% on the day. CrowdStrike was down 10% on the day. Accenture was down 7%. IBM, worst day since 2000, down 13.5%. MasterCard was down 5.7%. It's almost like we're vibe coding a brand new financial global system with the way these stocks are reacting. Bloom Energy was up 9%. GameStop was up a little bit. SanDisk, the memory stocks did good. Amazon, Google, Meta all went down on the day. Microsoft got the worst of it at 384. It was not able to kind of hold on to that 387 level of support. Alpha was down 4%. By the way, Nike, this one should have been the biggest winner out of the whole tariff thing, was down 4% on the day. The market still is feeling so insecure about what's going to happen with tariffs now that Trump extended this to 15% globally, that it ends up really not being the best for those retailers that you would think would be the trade after the tariffs got reversed. Question is going to be around the legality of it, but still, those stocks ended up taking a hit. All right, 1 minute for Hims. Put in the chat. What do you think? Put in the chat, up or down, pump or dump. I see the majority of you say dump. The stock's already down 15%. Oh my goodness, it's dumping. There it is, down 5%. Let's see if this reverses. It's the first minute. It's not even the first minute. It's the first couple seconds. Usually that can reverse. It's starting to kind of, oh, it went green for a second. Look at that. It's going green, kind of. Can it go green? I'm not even looking at the numbers yet. I'm just looking at the price action. Down 4. Oh, it's being erratic. Down 7. Oh, usually if you get down 7, it's hard to reverse. It's not easy when you're down at least. Wow, down 8. Oh my goodness. Okay, EPS, they beat by 60%, 8 cents versus 5 cents expected. That's not bad. Revenue, they beat by like, I mean, it's inconsequential. 617.8 versus 617.2. Revenue's up 30% year over year. EPS is down 27% year over year, but they beat by 60%. Nonetheless, the street does not care. Down 6%. Down 6%. I mean, if profitability was the concern last quarter, which, correct me if I'm wrong, but I think profitability was the biggest issue when they missed on EPS. They definitely beat by a very healthy margin. 60% is not a small beat. Regardless, looks like the street is not happy about it. We'll see if there's any level of change here. Revenue, $2.35 billion for the fiscal year. That's up 60% year over year. Net income of $128 million. Adjusted EBITDA of $318 million. Andrew Dudham says, more than 2.5 million subscribers now rely on us for a healthcare experience that is both accessible and deeply personal, and we believe we're well on our way to becoming the global leader in consumer health. Our financial results in 2025 demonstrate the power of scaling a deeply personalized consumer health platform as revenue went up 60% year over year. We have the flexibility to invest in scaling new specialities, advancing our technology infrastructure, and expanding internationally, all supporting our path towards 2030 targets of at least $6.5 billion in revenue and $1.3 billion in adjusted EBITDA. So they are keeping those targets of $6.5 billion by 2030, which management has talked about for a while now. HIMSS down 3.6%. I'm not necessarily seeing the immediate red flag on this quarter in particular, but it was a crappy day. It's hard to report on a day like this. And I guess the street doesn't love it. Gross margins did go down year over year, went from 77 to 72. Then again, those that have covered HIMSS might know better than me in Q4 if their margins are supposed to go down. So maybe that's not the biggest issue in the world. Free cash flow was negative compared to positive free cash flow in 2024. They went from plus 60 million to negative 2.6 million. Again, I think they made some investments this quarter that probably caused that negative free cash flow. Oh, are we going green? Is it flipping? Dude, it's not easy to flip after negative 7%. So if it actually completes the flip, that would be impressive. It's not that, dude, it hit $14. That's at $15.53, less than 2 cents from where it closed. I mean, maybe you get the reversal here. Again, I don't see an obvious red flag for this thing to be down another 10%. It might just end out flat today. That's weird. You would think it either jolts up if it's that close to going green. There it is. All right, now it's happening. 2% green. Now let's see if that can hold. 2% green. Whoever bought at 14, you just made almost $2 on that money. 15.78. Look at guidance. Do they give? Well, they already guided for. Oh no, let me see. Okay, they're guiding for 600 to 625 million for Q1. Adjusted EBITDA of 35 to 55 million with margins of 6 to 9%. For the full year, they're guiding for 2.9 billion. How much did they do this year? They did 2.35. So let's do some quick maths. Let's take them on the high end. 2.9 minus 2.35 divided by 2.35. They're guiding for 23% growth. That's not a lot of growth for HIMSS, from my understanding. They just grew 60% this year. So they're deaccelerating from 60% to 23%. Is that what you guys expected? Is that what people expected? And that's on the high end, by the way, 2.9. The low end is even worse. I mean, the low end, which I don't think they would come to, but that's only 15% growth. Yeah, that's not, hold on. That's the first red flag I'm seeing. That is not, where's the growth? Don't get me wrong, 23% is great, but this is pitched as a growth stock. 23%. It's not that profitable growth, by the way. I mean, EBITDA margins are 11 to 13%. That's not great. Yeah, that's. I mean, did people expect growth to de-accelerate? I think that's the reason it dumped. I think people were expecting like $3.5 billion of revenue or something like that. Maybe the analysts were expecting at least like 3.2, getting closer to 25%, not 2.9 billion. And maybe they're sandbagging here, but I don't know. That's definitely not pretty. That might not be what we want to see right there. The stock, though, is still down 2%. Stock is down 2%. A lot of that growth is growth they purchased as well. Yeah, I mean, again, it trades at 1.5 times sales. It's not expensive here. It's just the narrative associated with HIMS is not the best, given everything that's going on with Novo, lawsuits, etc. But also the growth is just not. They're going from 60% growth to 23% growth. I mean, yes, as companies mature, they're not going to grow as much, but it's not like you're getting juicy software margins in HIMS. It's a consumer product that has to fight for its moat every day and fight off competitors like Amazon, Big Pharma, et cetera. And now you're not getting even 30% growth. I don't know. Maybe I'm way off on this take, but that seems like the reason I think the stock immediately got hit as soon as the print came in. That's what we got on HIMS right there. Where's Kratos? Kratos is down 2%. It was down 6%. Now it's down 2%. So Kratos also getting a bit of recovery. We got a tariff headline. Let me pull this up around the EU. Let's see what we have right here. Trump also just put out an executive order that we're going to have to look at, but let's pull up this tariff headline first, and we'll get into that.
That they agreed to last year, even though the legal authority for U.S. tariffs has been stripped away by the Supreme Court. In that opinion on Friday, the president wrote, any country that wants to, quote, play games with the ridiculous Supreme Court decision, especially those that have ripped off the USA for years and even decades, will be met with a much higher tariff and worse than that which they just recently agreed to. Buyer beware. Now, that post coming after Europe warned over the weekend that trade deals with the U.S. could be at risk. Bernd Lang, the chair of the European Parliament's Committee on International Trade, called it pure tariff chaos from the U.S. administration. And he wrote on social media, no one can make sense of it anymore, only open questions and growing uncertainty for the EU and other U.S. trading partners. Now, the EU Parliament postponed a vote this week on the EU trade deal. Remember, they've been debating proposals that would codify the trade agreement with the United States, with a vote scheduled for Tuesday that's now going to be put off. Now it's not clear when, if ever, that agreement between the EU and the U.S. will be finalized. A White House official told CNBC on Friday that the U.S. does expect all countries to uphold their end of agreements with the U.S., despite the fact that we've got all this tariff uncertainty now. Mike, back over to you.
Uncertainty, there you have it.
All right, so the EU delaying their vote on the U.S. trade deal. By the way, that executive order is ending certain tariff actions. So Trump has officially put out the order to end the collection of tariffs based on IEEPA. HIM's getting a move now after hours. That one starting to show some signs of life, up almost 2% from 14 to 16, 1584 right now after hours. But that's the executive order you have on Trump. Also, we have a couple of quotes from Trump. I don't know where he's speaking right now, but he says, if we don't make a deal with Iran, it would be very bad for that country. General Kane was in charge of Midnight Hammer attack on the Iranian nuclear development. And General Kane is not against going to war with Iran. Wow. General Kane is not against going to war with Iran. HIM's really struggling to hold on to this pump now at 1562, but slightly green. So this is from the Washington Post. The Pentagon's top general has cautioned President Trump from an attack on Iran, saying that shortfalls in critical munitions and a lack of support from allies will add significant risk to the operation and to U.S. personnel. And then you have Trump saying General Kane is not against going to war with Iran. I guess we're going to see if this ends up happening. HIM's basically flat. Kratos still getting hit, down 3%. It did recover from 87.60. But those were your two earnings today, folks. Kratos and HIM's. Again, I think HIM's, there's no red flags outside of the declining growth rate, but maybe that was already baked in given the stock was down 50% going into this. Kratos, the only issue it looks like is fiscal year guidance, but adjusted EBITDA, EPS, and revenue are all beats. So not sure why that stock is getting it up. We got a new Trump tweet. Okay, what is this? What is this? This is about the Iran story. General Kane, like all of us, would like to not see war, but if a decision is made going on against Iran at a military level, it is his opinion that it will be something easily won. Wow. Everything that is written about a potential war with Iran has been written incorrectly and purposely so. I am the one that makes the decision. I would rather have a deal than not, but if we don't make a deal, it will be a very bad day for the country, and very sadly, it's people, because they're great and wonderful people. Okay, so Trump once again confirming that if there is any military action, it will be his decision, his decision only, that caused that to take place. I think Diamondback Energy also had earnings today. That stock is down 4% after hours, up 14% year to date. Let's pull up those numbers because I do think we just got those earnings as well.
Ahead of the $3.31 billion that the street was looking for, but it is that EPS miss adjusted at 174 versus $2.08 that Wall Street was expecting, and those estimates have come down a lot in recent quarters. So this is definitely not the number the street was looking for. Now, the company said their production averaged about 512,000 barrels per day during the fourth quarter. They did also increase their dividend by 5%, and they see full year production guidance of about 500 to 510,000 barrels per day. You see here the stock down some 4.5%. Mike?
Pippa, thank you. All right, tariffs and the software.
All right, Diamondback Energy. That stock as well getting hit today. It's an energy name, so you would think maybe it's in the right sector, but there you go. 4% down, is already down 1.2% of the day. $50 billion company. Kratos still down 3.5%, and HIM's basically flat. I mean, it's down a little bit after hours, but basically flat now. That's what we got, folks. That is what we've got on these earnings. I mean, it is now happening here. By the way, this executive order, I'm reading through it a little bit. It's going to end IEEPA-based tariffs, including those that would penalize countries shipping oil to Cuba. Yeah, we did have tariffs that actually were going to, if you shipped oil to Cuba, you had to deal with the tariff. The directive halts collection of all IEEPA duties, including those tied to the Cuba emergency order, but leaves the broader embargo still intact. Cuba generates over 80% of its electricity from oil, and prolonged shortages have already triggered widespread blackouts and strain on hospitals. The policy had pressured key suppliers, particularly Mexico, to halt oil deliveries. Experts estimate the island's fuel reserves could be depleted by mid-March 2026, according to the New York Times. There it is right there. There were so many different ways that IEEPA was being put in place to be able to say, hey, if you don't do this, you will have to deal with more tariffs. All of those are now illegal. All of those. And this executive order that Trump put out today had to officially comply with the Supreme Court. The Supreme Court is the law of the land. It's the highest law. You kind of can't go against it here. Although, again, the administration is implementing tariffs in a different way, but at least the IEEPA ones are now no longer valid. That's what we got. That is what we got. I think we had one more earnings, BWXT. $18 billion company. That stock's at least up 6%. I think their numbers were actually kind of decent here. Let me pull this up. Revenue 885. That's a beat, up 19% year over year. Fiscal year revenue 3.1 billion. That's up 18%. Backlog 7.3 billion. That's up 50%. Fiscal year 2026 guide 3.7 billion. Looks like they beat on that number as well, as that stock does go green. This is a company that supplies nuclear components and fuel internationally. BWXT, $18 billion company. That stock up 7% after hours. Okay, that's what we got. That's what we got from earnings today. Again, for those that came for HIMS, HIMS is down 0.5%, which is better than when it was down 8%. That initial dump definitely felt a bit unwarranted given how much it was down this year. But it looks like that's recovered to at least be flat. Uber just bought a company. Uber acquires Spot Hero, adds in-app parking reservations. Uber is down 4%. Uber to acquire Spot Hero, integrating parking reservations directly into the Uber app. Let me know if anyone's ever used Spot Hero. I think I've used an app like them, but not that specific app. Spot Hero operates across 13,000 locations in the US and Canada. Deal expected to close in the first half of this year, subject to regulatory approval. I wonder how much they paid for this. Spot Hero valuation. Can we find the valuation? Last valuation was 300 million. All right, so maybe they paid like 500-600 million. Maybe that's not the craziest acquisition. Spot Hero is what Uber is acquiring. Let's go deeper into some of these HIMS numbers and see what else we can get, because I think that's also something that could be causing some of the pain. HIMS added only 40,000 net new subscribers in Q4, a gain of just 2%. Is that true? Because that could also be the reason the stock initially fell. Subscriber growth, 2.5 million. That's up 13% year over year. Net new subs. I mean, if it's only 2%. First of all, that subscriber growth also isn't that good. I'm just seeing that right now. 13% is like, again, the biggest critique of HIMS is that they don't have a moat. So the way you combat that is show that you're growing like crazy. Less than 20% subscriber growth. Maybe not the best. Yeah, 40,000 new subs. 40,000 net new subs. I mean, that is significantly lower than I think what the street might have expected. I guess that's why the stock's not doing the best right here. 60% to 23% revenue growth, which even if they beat it and they get to 30%, it's going from 60 to 30. And again, it's not specific to HIMS. I mean, like any stock that is growing that fast and then slows down, you know, there tends to be a bit of a re-rating, especially if the street feels there's already not a moat to the company. We've seen that with plenty of growth stocks this year already. It looks like that could be happening with HIMS. HIMS right there down 1%, 40,000 new subs, 13% subscriber growth. BXT is up, Diamondback's down, Kratos is down, and then HIMS is down. Okay, that's what we got, folks. That's what we have for earnings. Again, we talked about that Trump tweet. He confirmed that if there's going to be anything that's happening with Iran, it's going to be based on what he says. Reading from the tweet right here, everything that has been written about the war with Iran has been written incorrectly. I will make the final decision. And I'm sure he'll talk about that tomorrow at the State of the Union, because the State of the Union is going to be, you know, where he talks about Supreme Court's tariffs and all that other stuff as well. I'm looking at a headline right now. There's no way this is true. Is this actually true? There's no way the headline I'm looking at right now is true. I am going to search this real quick to make sure there's at least one more headline confirming this. Because if it is true, hold on, we gotta look this shit up, dude. It has to do with Claude again. This has got to be fake, bro. Yeah, this is fake. This is definitely fake. Okay, this is fake. But see, this is how on tilt. Anthropic announces Claude is launching its own 2028 presidential candidate, and then there's a poly market showing it's at 30% odds. It's fake. It's fake. But it's just like, you know, it's someone just photoshopped this. But the fact that I even took it seriously for a second, it shows you how much the market, or how much I'm susceptible to Claude headlines. Look at this shit. Claude T1000. Goodness, bro. What is going on? It's taken over the world. It says more about you than the market. That's fair. It does say more about me. But again, every Claude headline, apparent. Like, I didn't believe that IBM thing was Claude. And then I was like, oh my goodness. COBOL. That's what's messing up IBM. 14% today. Like, it is absolutely incredible. But this is the state of what we're dealing with right now. All right, so let's get into a bunch of headlines. We should have a guest joining in about 5-10 minutes. We'll get their thoughts about what's going on in the market. But we still have a bunch of other things that happened throughout the day. The SaaS sell-off was the worst of the day at least was the worst headline of the day that created all the pain. The Cercini Substack went viral as well, and that continued to create, more and more pain across the entire ecosystem. Jose will probably be on tomorrow, or not tomorrow, I think Wednesday morning before NVIDIA earnings, and so I'll be streaming NVIDIA earnings with him. Tanner, I think I'll be streaming with Tanner as well. It'll be a bunch of us. Claude is his guest today. And NVIDIA is going to be important. We cannot have an ugly quarter. Take a look at this. Speaking of NVIDIA, the latest GPU rental prices for 6-year-old GPUs, A100 and H100, are still making new highs. I mean, this is just absolutely incredible. More and more compute demand is scaling higher to the fact to the tune of almost half-decade-old GPU rental prices continuing to go higher. And what's exciting about that is, like, if there's that much demand for the old stuff, that there's even more demand for the newest edition of those GPUs, which, again, we're going to get a bigger taste of when Jensen is going to be live on GTC. And if that's not slowing down, I imagine the earnings projections for NVIDIA are not going to slow down either, which is something that, should be relatively strong for the market to hopefully digest. Should be fun. We had a new $400 price target on NVIDIA. Yeah, so that Cantor $400 price target on NVIDIA, I mean, realistically, they're saying it's $300. So their estimates are that next year, NVIDIA is going to do $9 to $12 of earnings instead of $7 to $8, $8.50 of earnings, which is like the analyst consensus right now is $7.76. So they're like, hey, if you put a 30 multiple on that, I mean, that easily gets us to $300, or a 25 multiple that gets us to 300. If you put a 30 multiple, that gets you to 400. I think if we even get to 220, people will be happy. But they say with a clear path to EPS tracking $12, we continue to see fair value of at least 300, which would equate to a 25x multiple through given growth prospects to the end of the decade. We believe an argument could absolutely be made for 30x, which would support a bull case closer to 400, as NVIDIA remains a topic. Do you think NVIDIA earnings will get the market green? That's a good question. Let me put that in the chat, see what people think about that. In general, I think this market needs to get through February. We got to get the hell out of February, first of all. Just seasonally, it's not the best time. So we got a couple days left of that. Number two, it's like, I don't know how NVIDIA goes up to 210, S&P stays flat. So I do think NVIDIA can pump it in general. But I don't know if NVIDIA fixes the SaaS issue. Right? Like the overall SaaS pain that we're seeing right here. Does NVIDIA going up pump the market, solve the broader issue around SaaS? And quite frankly, it feels like the market once again is becoming a stock pickers market, and and like we don't need everything to go up and go down together. HIMS, by the way, getting hit now, down 3%. The market will be totally fine, and we saw this today, getting NVIDIA to go up a couple percentage points and everything else to be falling, like the bottom is falling out. The fact that the S&P was down 1 today, NVIDIA was up 1 today, and Microsoft was down 4, kind of diverts the narrative that the algos are moving everything together, because now it's like the algos are moving everything in a sector together, while the other sectors or individual stocks within those sectors, because semis weren't up today, but NVIDIA, I mean, AMD was red. Like literally, this was just buy NVIDIA and hold on for dear life today. That was the one that was going green. So maybe the market could still dump and NVIDIA kind of holds on. I just find it hard to believe, given NVIDIA is 8% of the S&P 500. But we'll find out in a couple days. We'll find out. Would an NVIDIA make the SaaS issue worse? Yeah. Now, again, Jensen's talked about the software stuff, and Jensen is not on the side of the people that are being super doomeristic around software. In fact, he said that AI is going to help software. There was a clip of him. I'll play this from 2 weeks ago. Obviously, he wants to make sure the software companies don't die because they're big customers for him as well. But theoretically, NVIDIA doing that well and Anthropic showing more efficiency gains, yeah, maybe that's not good for software.
There's this notion that the software industry is in decline and will be replaced by AI. You could tell because there's a whole bunch of software companies whose stock prices are under a lot of pressure because somehow AI is going to replace them. It is the most illogical thing in the world, and time will prove itself. If you were an artificial general intelligence, would you use the tools like ServiceNow and SAP and Cadence and Synopsys? Or would you reinvent a calculator? Of course, you would just use a calculator.
Honestly, the way the market's acting is no, you would actually create your own version of ServiceNow and CRM. Now, I get what Jensen's saying, and it's very logical, right? Like, no, you would just implement into the legacy architecture and then continue to become more efficient. But the way the market's pricing it in is like, nope, the AI is going to create its own version of whatever tool or legacy architecture that it could be using. And that is where I think you get IGV being down 30% for the year and the market being very, very afraid of how this is going to end up playing out. Palantir right there was also down about 3.4% on the day. Hood was down 5.6%. SoFi, at least it recovered above 17, but you know, that stock, ugly day, down 4.2% as well. His logic is weak. Why would AI use a mediocre human tool? Yeah, and I think in the past 2 weeks, more and more people have recognized maybe their CRM is mediocre. You know, maybe their infrastructure that they thought was important for a robotic processing automation that they're paying a contract to for Path is not needed. And there's a way they can do it themselves. You had this, let me show you guys this article that also went viral. This was someone that said, Claude just killed our startup. This was a person who built a startup and they were growing pretty fast. And the point of their startup was, we built an AI agent that automates ad management for you. Like, you can give it access to all your Google and Meta accounts and it will manage it for you. Pretty cool. Customers loved it. Claude and Manus Meta just acquired them recently, both released connectors for Meta ads. Claude still can't make changes in ad accounts. It can only do analysis. And so it has no access to Google ads, but give it a few months and it will. So building here feels pointless. Every marketer will have Claude Cowork, ask, launch me $1 million ad campaign, make no mistakes, and go, go, go. And so this person that created a startup that built AI agents to help you manage advertising campaigns across Google and Meta ads just realized that Claude is going to do it way better than they could do it, with way more R&D to be able to make it better and better. And their close rate was 70% on new customers. It dropped to 20% after Claude and Manus released the same feature. So it's just another anecdotal example about more and more people are recognizing that these AI agents from the foundation model companies are just better than anything they can create. And you know, although the promise of AI is that you can start a business, you know, immediately, and you can, you know, think of your ideas, and you have AI and it can start going to do stuff for you. Can that business, you know, the internet was really cool because the internet opened up opportunities for so many businesses. Is AI going to actually cannibalize a lot of those businesses, even if you have an idea, because the foundation model companies themselves are just going to have agents that do the trillions of different things that people have ideas with to come up with. Whereas on the World Wide Web, you know, you had different websites. Now, again, social media kind of changed if you had a cooking blog and everyone is on Facebook, it's hard to take attention from Facebook on your cooking blog. So the social media companies did commoditize attention to an extent. But if the AI agents are just better on Gemini, Anthropic, OpenAI, Meta, et cetera, than what startups are offering, then, you know, you might not pay for them. And so I don't know what this means for SaaS. Is this bad for Path, Zeta, CrowdStrike? I mean, the thing is, you know, Zeta has earnings tomorrow. I don't know how Zeta can gap up 20, 30%, even if they put up amazing numbers. If CrowdStrike gaps down 10%, if Microsoft is down 5%, if Salesforce is down 35%. Now, I think they can stop themselves from going down another 10, 15% because they can put up really good growth numbers. Same thing with Path. Path was, you know, something a lot of people loved when it was around 15, 16 bucks. It was finally breaking out close to that $20 range. It got hit right back down to 10 because now it looks like RPA is going to be commoditized. Palantir, I think, is a bit different, not only because they have real growth rates that are just like undeniable. They also have margins that are undeniable. But once again, I think we're recognizing that the orchestration of AI inside of an enterprise matters way more than anything else. And that is something that Palantir is positioned to win at a very strong level. So I don't think AI necessarily commoditized that, but you had OpenAI come out with their version of forward deployed engineers last week. And, you know, they're talking about how they can implement with enterprises. OpenAI partnered with a bunch of different consulting firms today. So you do have competition coming for Palantir. It's not like you don't have competition there. And this is where Palantir is just going to have to keep up the growth. And, you know, they guided for really good growth this year. So I think they will be fine. But once again, if it's in the bucket of SaaS is trying to be delegitimized by these broader AI narratives, then yeah, I think a lot of these stocks, unfortunately, are taking a hit. Duolingo, I mean, that's the most. I am the most interested for Duolingo on Thursday. Like, I am really interested after this stock being down almost 60%. Is it going below? Is it going to $50? Are we officially done with the green owl, or can they prove they have a moat in this AI world? And how much growth does the street need to see to feel that language learning via the green owl is a moat and that it's realistic to survive? I think time will tell, but we got a lot of earnings this week. Intuit's this week, obviously NVIDIA's this week, and we're going to hopefully get a bit more clarity on how this is all playing out. All right, let's bring on a special guest today. It's a bit snowy in New York, so they were able to stay home, which means they're able to grace their presence for us on the market close. Ladies and gentlemen, have no fear, because the milkman is indeed here.
You know, out of all the earnings this week, you're most excited for the green owl?
I genuinely am curious to see if this stock collapses or if they can hold up. So yes.
Curious, sure, but I mean, there is nothing more exciting than NVIDIA this week.
That's fair. That is fair. There's nothing more exciting.
Because you know what? If Jensen doesn't save us, this is November all over again. If he don't save us, forget it.
I think he will. I hope.
The market is on Jensen's shoulders once again. Everybody wants to invest in individual stocks until it gets bloody in the streets.
Okay, before we get into NVIDIA, I want to have a quick discussion about tariffs. I want to show you guys this clip. So this is from a streamer. He does pop culture streaming, okay? He like, we stream, but we do like stock market stuff. This guy does pop culture stuff. His audience is probably like 15, 16-year-olds. I thought it was funny just how he was talking about the tariffs, and I want to get your reaction to what has happened over the past couple of days and see what you think about what he had to say as well.
This is what you supported. You said you wanted Trump. Listen, bro, the reason I wanted Trump was because I wanted to make more money. All right, that's why. I'm going to say it. At least I'm honest. I don't give a fuck. At least I'm not sitting here lying. I don't give a fuck who's the president. I want to make more money. I'm a greedy bitch, okay? At least I'm saying it. I've been saying it from day one. Now tell me why I ordered an $8,000 exhaust. And then a week after I order it, I get a call. You got to pay a 57% tariff on it. What? I got to pay an extra over $3,000 when I already paid $8,000 on a fucking tariff. I don't even know what a fucking tariff is.
I thought that was, I don't even know.
First off,
I thought that was kind of funny.
The fact that he's got a Kobe jersey hanging on the wall, respect.
What is your reaction to the Supreme Court decision, the Trump 15% from 10% tariffs? I mean, what do you think is happening with tariffs right now?
I got two thoughts. First thought, and I need to look more into it, so give me a little bit of rope and take what I'm about to say with a grain of salt. I believe they wrote it in a way where he can actually pull this off going a different direction. And two, if anything that we've seen from him in the past, he's going to get exactly what he wants at 10%.
Did you get a new mic?
No.
Your mic sounds, guys, it's just me. His mic sounds crispier. I don't know. Your mic sounds.
I think I hit something on the back of it, one of the knobs by accident when I picked it up.
It sounds like there's zero echo, and it sounds so much better for some reason today. I don't know.
What about now? Does it still sound good?
No, now when you move back, it sounds.
So it's because I'm leaning forward right now.
Okay, there you go. That's better. So you think the 10% global tariff will still stay in place at the end of the
Yes.
Do you think that's good or bad?
I think it's fine.
Or is it just the status quo? Like it was what it was?
Yeah, it's status quo. I mean, why does anybody really care?
I agree with you. I don't know if they're going to be able to legally justify the tariffs via these new sections as easily.
Here's the thing about tariffs. And I felt this way for a long time. This is not a Trump thing. I've been saying this for a very, very long time. You want your products on the greatest consumer stage in the world, you got to pay the piper. And if you're going to tax our companies doing business in your country at a certain rate, I think we have every right to put a 10% on. In fact, I would say tit for tat. Whatever you want to put on as your tariff, we'll match. You want 100%, we do 100%. You want 0%, we do 0%. Make it true free trade.
Well, the pushback is if U.S. consumers have to end up paying that cost, then is it really?
Well, then it gives American companies that much more incentive to innovate and make better products.
It's fair. I mean, that was the entire thesis around the tariffs in the first place. It's a fair point. I do think the ability to actually get these tariffs out into the world in a legal way might be a little tougher, but nonetheless, this is what we're going to have to see the administration do. Real quick, let me just get through these HIMSS earnings because we have some coverage on this, and then we will get into NVIDIA discussion as well.
We have revenues coming in line with guidance. 618 million, 619 were expected. EPS was a 3-cent beat at 8 cents ahead of the 5 cents that was expected. Now, what's more mixed is guidance. In the short term, Q1 revenue guidance is a miss, 600 to 625 million. We were expecting around 650. And then you have Q1 adjusted EBITDA coming in light as well, 35 to 55 million behind the 81.7 million. Now, if you look at the full year guidance, it is coming in line, 2.7 to 2.9. In fact, a little bit ahead of that 2.74 that was expected. Tonight, though, it's going to be all about the earnings commentary around HHS investigation, perhaps international expansion. I'll be sure to bring those highlights to you. Alyssa?
All right, HIMSS right there is still down 2%. Okay, NVIDIA. Wednesday. Seems like this will be a big one. We've got a lot of nitty-gritty topics to get into for NVIDIA, but raw take, do you think Jensen delivers what we need for him to deliver?
Yeah, I think it's going to be pretty hard for him not to deliver.
Okay, so then do you think the stock reacts to what he delivers?
That's a different story. I mean, we know what the big four spent in CapEx in Q4. We know a significant amount went to NVIDIA. Oracle has not reported yet, but you have to believe that their CapEx is going to be significantly higher than 2024 Q4 or Q2. They're not on a calendar year. But everything that we're seeing for the Q4 numbers is increased spend on semis.
Yeah.
So it's going to be hard for NVIDIA to miss. Now, the question is, what type of guidance do they give? Do they stick with the theme that they already laid out, or they can increase guidance? And what does 2026 actually look like for them? And does Jensen stay on the narrative of this is a multi-year cycle that keeps expanding?
Yeah.
Because for NVIDIA, this can't be 2026 and then in 27 it starts to decline. This needs to be a multi-year build out that just intensifies, and CapEx is not stopping or not either staying at the same rate of expansion or going into maintenance mode in 28. Like, this has to be seriously the next several years. Otherwise, we're just going to see the market get scared.
And you think it's very unlikely that the peak to CapEx plays out in the next few quarters or even in the guidance? Because if it does, it goes against pretty much everything we've been hearing from every other company like TSM.
Yeah, I mean, look, I'm not going to go off of what anybody on the internet says. I'm not going off of tweets. I'm going off what the companies are saying and what their numbers are. The facts, not my opinion. The facts are Taiwan Semi is the largest semi fabricator in the world. They increase CapEx.
Yep.
They simply have too many orders to fulfill. They have to build more factories. They're not doing that if this is just a 1 or 2 year build out, in my opinion. So they're increasing CapEx. Fact. Memory companies, whether it's RAM or hard drive space, can't keep up. Those are facts. And the biggest fact is the hyperscalers continue to spend more. So it's hard to believe that this is going to slow down in 27.
Yeah, I agree. And I think if it doesn't slow down in 2027, then it comes down to the multiple on NVIDIA. And if you think EPS is $9 instead of $7, and you put a multiple anywhere near 30 times versus 24 times, you're looking at a $250 stock or close to it.
Yeah.
Which, if a stock's at 190 and it's going to 250, that's a hell of a return.
Why are you wearing a collared shirt? I just realized this.
Why not?
You're always wearing a hoodie. It's
Yeah.
freezing outside.
Well, that's true. It finally stopped snowing, but you know, just wore a collar shirt. That's all.
You should wear collared shirts more often.
If you look at that, I button the top, but I like the top.
It suits you.
Okay, so Michael Burry wrote a long article this weekend around basically the hyperscalers being full of shit and spending all this capex with zero regard for shareholder value. You did put a response to it. I'm going to quote it, or I'm going to link it right here in the chat for anyone who wants to read it. Could you summarize the extent of what your response was to him basically saying the hyperscalers are completely lying about their accounting?
Look, I respect Dr. Burry. He's called a lot of things. He's super intelligent, and he's one of the richest people in the US. He's got an incredible resume. The problem that I had with his post, and look, before I wrote it, and I should clear this up publicly on X, and I plan on doing it, I looked on I'm not familiar with Substack. So I looked on the article section. I did not see anything about hyperscaler accounting. He did, to his credit, put something out in the notes section, which somebody told me I went and looked. He absolutely did. I can't read it because it's still behind a paywall.
Oh, why don't you just pay the $400 to read it?
I'm not paying $400 for that. Like, I'm getting closer, but I'm still don't want to. The problem that I had with it is you make a public statement about accounting irregularities, but you don't back it up with the data publicly. And at the time, I did not know that he put out the data behind a paywall.
Well, no, but it's still not public if it's behind a paywall.
Right.
If you're going to accuse the hyperscalers of fraud in public and then not support it with the data in public.
And that's part of my problem with this, because how can you say that the largest companies in the world are misclassifying things when they are not using a mom and pop shop as their auditing firm? Most likely, it's one of two firms. It's Ernst & Young or KPMG. Those are the two biggest. Maybe it's Deloitte, but I don't think it's going to be somebody else. Very small chance Price Waterhouse, but out of those four, those are the big four in accounting. So the chances of these companies using somebody other than them for their auditors is very slim. And I think that when you start making public statements like that, it's very dangerous. And all of the data supports the exact opposite of what he's saying. The other thing is, let's say hypothetically, and it goes back to the Palantir thing that he said. Let's say hypothetically, I got to choose my words very carefully because I don't want to make this seem like something it isn't. Let's say that you were to move some expenses from one line item to another, okay? At the end of the day, the free cash flow and the net income is still going to be the same. Maybe your gross profit and maybe your operating income change a little bit, but the bottom line numbers will be the same. So what are we really talking about here?
I agree. And also, if the most important companies that are essentially countries at this point on the planet are cooking their books, I mean, we're all cooked. Like, if Microsoft's lying, if they're pulling an Enron here, I mean, like, yeah, it's a hell of a thing if Burry's going to be right about that. But I would be skeptical that that's happening.
I mean, and that's the other thing. People didn't have visibility into what Enron was doing. We know that everybody uses Windows for business. We know almost everybody uses Office 365. We know that Azure has roughly a third of the cloud hosting. So we have visibility into what the hell Microsoft is doing. We know Alphabet owns YouTube. We know search is the biggest thing on the internet. So it's a little hard to believe that they're cooking the books.
Yeah, it's a bit difficult. Alf, by the way, right there purchasing one of the directors about $500,000 worth of some shares. Okay, so you think CapEx is going to be good. You think earnings are going to be strong. You think the market theoretically should be able to price all of that in. which I think then begs the conversation around what's happening in the world of software. I want to play a clip right here and then get your take on what you think's happening.
Before you do, I just want to say one more thing about the Burry thing.
Yeah.
So, look, the meat of his post was, when does it end? And I think it's a ridiculous thing to ask because, and this is what I said, the reality is that it ends when demand for compute stops growing. These aren't speculative bets on a technology that might work.
But see, here's the thing. I don't think he believes the demand for compute is real.
Well, but that's the problem. You know, we're talking about Microsoft, Alphabet, Amazon, and Meta, and they're deploying capital in response to existing paying customer demand that is currently outpacing supply. That's not a bubble dynamic. That's a capacity constraint. The spending slows when supply meets demand, not when somebody rings a bell or calls bullshit. And the reality is that's not happening right now. And I would rather, in this case, and look, Burry's made a name for himself being correct, calling everybody out on BS. But I'll take the side of the AWS CEO saying that they're going to be capacity constrained for several years. I'll take the side of these CEOs because it's not just one of them, it's all of them saying the same thing. So I want to know how Burry is coming up with the fact that the whole capacity thing is ridiculous. That's the part I have a problem wrapping my brain around.
Yeah, I agree with you. And, you know, this comes down to a question of, do you believe compute demand is insatiable or not? Because if you believe it's not, then eventually this is not only going to slow down, but it's going to be overbuilt to such an extent that it will literally remind people of dark fiber. If that's not the case, which it doesn't feel like that's the case, just given everything we've been seeing, then yeah, that means more demand is increasing. And when does it stop is when, as you said, I loved how you said, when compute demand stops. And if you have 6-year-old GPUs, A100s, getting their rental prices go up, it likely means it's not stopping. At least not soon. All right, software. Want to get your take on this, and then we'll get into that discussion.
In the early years of ESG and COPE, where people thought, hey, this is the end for fossil fuels, and they went into free fall. And then eventually they recovered because it turned out that the threat was not to a core business. The fossil fuels were still required. I agree with you that the Salesforces of the world and the Oracles are much more sticky businesses than we let on. So if you look at them, software is only a small piece of the puzzle. It's actually the least, you know, of all the competitive moats, it's the least of the moats. You could probably replicate their software pretty easily. But once they get adopted, they squirrel their way, if that's the right word, into your systems, your data, your processes, and they become part of your company. So it's not just replacing software, it's an entire system. Here's how I think it's going to play out. And I think this is where the software companies are looking. The problem is much of what they do now with people, which is what the expensive part is, to track these processes, can be done by AI. And they're offering AI products that effectively do what their regular products are doing. But I think one of the mistakes they're making is what brick and mortar retail firms initially made with online retail, which is they worry about cannibalization. So they can't go in full force with an AI product, even if it's a really good one, the same way that somebody who has nothing to lose can go in. So I think what you're looking for as an investor is which of these companies are using AI in a way that they're willing to give up their existing product sales and replace them with AI. Those companies will make it. And which of the companies won't have their cake and eat it too, which is sell their existing products, charge the prices they do, get the high margins, and offer AI as a side product. But they're not willing to jump in.
So for the past couple of weeks, I know you have been making the argument that enterprise software can't easily just be replaced. The sell-off has only gotten worse. Microsoft's getting hit. CrowdStrike. We thought cybersecurity. You and me were both saying, well, cybersecurity is going to be safe. Cybersecurity is down 20%. Do you have any updated thoughts on how you're thinking about the world of SaaS now?
Look, obviously, currently I'm incorrect, and I'm man enough to say I've been wrong so far. I can't predict the future. I still think that we have a bigger problem right now, and I'm not escaping the answer. I'm going to answer it, but I think that we have a bigger problem that the markets can move this much on a tweet or a letter that was written by something that may or may not happen in 2028. Like, this is a much bigger problem. And I think that I can't pronounce his name that was speaking. I think he's incredibly smart. I liked a lot of what he said. And you hit the nail on the head with a lot of things. you may be able to code something if you have enough tokens that can do something for you that these software companies can, but it's not just about that. It's about when everybody is trained on it, when you already put all your data into a system and you already have your processes, it becomes part of your organization. And C-suite executives are not going to bet their careers on making some type of change without such a level of certainty that I don't think that they're going to get from a homegrown product. We've seen this play out previously where we went from homegrown products to SaaS. Now, a lot of companies ran things on Access databases. Most of all that's been replaced by SaaS products. Now, I know that this is different with AI, but at the same time, I think the more likely thing is that smaller companies will find a way to utilize AI to get their workloads done without paying these big software companies. I think enterprise level clients will keep the big software companies, and the key is going to be if these software companies can monetize agents and their AI products to offset the potential loss of seat revenue as workforces compress.
Do you think the incremental dollars is what the market is pricing in won't be guaranteed to go to a Workday or a Monday.com or a Salesforce anymore? Like maybe they'll keep their existing clients, but maybe Anthropic's going after the new ones, and that will be a debate versus just guaranteed for them.
And I think that I look at things a lot differently because I've used a lot of products and worked at very large companies. And there's just no way for you to run a large scale company without an ERP system. And for everybody that thinks about Palantir as an ERP, it is an enterprise resource planning system, but it is not one for back office. It is one for forward deployed engineers. It is for manufacturing. It's for decision making, a lot of things. When I'm talking about this in this context, I'm specifically talking about your human resources and financial department operations. You have to have a robust ERP system to run a multi-billion-dollar business, or even businesses that do 50 million or 100 million in revenue. You can't have businesses with thousands or tens of thousands or hundreds of thousands of employees without having these systems. And I just don't think that a company is going to replace a PeopleSoft, an SAP, or a Workday with something homegrown by AI, especially when these products are embedding AI features into it. The amount of capital from human to monetary to go through an implementation to get off of these things is insane. I've been through these implementations before. The resources are incredible. Now, an Adobe, that's the one I've always been concerned about. A Salesforce, I'm a little bit less concerned about. A ServiceNow, I'm a little bit less concerned about, even though they continue to go down. But I think the next couple of years are going to be really interesting, and maybe software gets re-rated to the downside, regardless of what their profitability is.
Well, I also think the foundation model companies are realizing they need to win the application layer. They can't just be the back-end API. And so that's why when Claude says, hey, we are introducing Claude Code Security, which is just scanning a code base. It's not like massive total endpoint security that CrowdStrike's focusing on. You start getting the market thinking, what if Claude decides that if they can sell an enterprise customer on Claude Code Security, they can also sell them on something else, and they can actually control that relationship versus letting CrowdStrike use their backend and control the relationship and just go directly to the business, which then marks a bigger question around, okay, what's that? And if an Anthropic is like 50% cheaper, theoretically, because they can subsidize the cost, take the loss, that's where I think the market starts to re-rate these companies.
Do we really think that Anthropic is going to create their own security full-blown suite of products? Do we think that Anthropic is going to be in every single sector? And at some point, is the government going to step in and have antitrust against them if that happens?
Well, I don't think the government, if they are building their own internal products, the government can't do shit. Now, if they're acquiring a company, maybe that's different. But now, to answer your question, yes, I think they will. I don't know if they're going to be successful, but for them to justify the valuation, I think they have to, right?
for them to justify the valuation, they have to do something. I will tell you, I just paid for the Claude plan, and I burned through all my tokens. I can't do anything until 8 p.m.
Wow.
And I got to tell you, what you can do with Claude, and I am a freaking idiot when it comes to this stuff, and I am proud to say it because I truly am an idiot when it comes to this stuff. What you can build just by having an idea and then refining it is truly incredible. And I do think that we're going to see more and more people getting Claude subscription plans, because I took the same prompt and put it in ChatGPT and Gemini, and Claude was so superior, it wasn't even funny.
What do you want to talk about? What you tried to build?
Not yet.
Okay, but Claude was better. Claude was better.
It's significantly better. All right, so I'll tell you. I guess it doesn't matter. I'm not making this to make money off of or anything. So I asked it to create a couple of agents in different areas of economics and other things to build me a morning report from when I wake up in the morning and aggregate a bunch of different information that I put in there. That way I don't have to sift through a bunch of articles and I have everything I want at my fingertips. And I told him what website.
So you replaced me.
So
you literally, dude, I thought we were friends.
Listen,
like you could watch the market open every day, or you could.
I need something for when I wake up in the morning.
You replaced me. You're literally saying you replaced me.
I made my own newspaper.
I'm supposed to be the news in the morning.
No, you're the news throughout the day.
You really replaced me, bro.
How did I replace you? This
you
is
don't
only
watch the show anymore. You have your fucking news right there. A little Claude.
This is my morning report when I'm drinking my coffee.
My show is called The Market Open.
Yeah, this is before the market opens. And this doesn't give me everything throughout the day. I get everything from your Twitter account.
This is the end, guys. This is how it's done. this is how this all is over.
It is not how this is all is over.
I need to start an hour early every day now to get into your feed before your Claude thing gives you.
Well, if you are able to come on and talk while I'm drinking my coffee, I'd rather listen to you than read. It's less brain capacity for me.
But in all seriousness, are you? So I don't know if you read through the Citrini article, but are you feeling some of the, because the article literally references what you've been warning about many times that we've talked, that unemployment's going to go through the roof. Do you still feel that could be a massive concern?
Yeah, it's a massive concern. I don't think people. So the problem that I have with the report wasn't that side; it was the other things. But I think that they're right about some things. You can't tell me that. And Calacanis talked about it, and he got misquoted.
Literally, people aren't going to watch the show anymore. They're just going to tell Gemini, summarize amidst market open, give me the bullet points. In 5 minutes, they will have the news, and it'll be over.
They could have done that before. What I built, and I'll show you what I built offline. It's pretty cool. So I need something for when I drink my coffee.
Okay.
Is what I need. And I like reading. I don't want to watch CNBC. I actually prefer to read. So it's specific to what I am interested in and tailored to what I want. Anyway.
Okay, so the unemployment thing wasn't the biggest concern. What was the biggest concern then?
No, look, let's stay on unemployment. The problem with this, and I've been saying this for a while, is if we think that the largest companies are not going to figure out a way to automate their top 5 or 10 repeatable processes, we're crazy. If we think that Amazon and Walmart aren't going to opt for humanoid robots over the next 10 years to replace their warehouse workers, we're crazy. If we think that companies aren't going to adopt full self-driving when it's actually available rather than having delivery drivers, we're crazy. It's called the world of insurance. It's called less claims, less workman's comp, less accidents, lower premiums, margin expansion. And I don't foresee a way to create job growth to counter that. And I've been saying this for a while. I think that this is now happening a lot quicker because of everything Claude is doing. And it's forcing the other companies to get that much better, that much quicker.
So could you imagine 2028 we wake up and unemployment's at 10%? Because that's a hell of a claim if it were to happen. That would be under Trump too, by the way.
10% may be a little hard. Now, if you say 2035, I actually think it could be more like 15%. I think the mass part will be with robotics and full self-driving. I think that the AI aspect is going to be a little bit less because it may just make people more efficient. And I'm not exactly sure how much of back office you're going to be able to cut. But I got to tell you, I really do think you're going to see a huge transformation in warehouses and delivery aspects and logistics.
Okay, so what was the craziest part of the report?
The craziest part about the report is just the shock that it caused in the market, and now everybody thinks everything's going to zero. Like,
yeah, it's kind of crazy. I mean, they're projecting ServiceNow's report, and it's
right.
like, just imagining those.
Q3 26, we haven't even gotten to Q1 26.
But the crazy thing about the article going viral is that it's like it's like an apocalyptic movie inside of an article. But today we saw part of that apocalypse, at least in SaaS and part of fintech, because the article talks about payment providers, feel the pain of what the article was talking about, whether it's justified or not. And that's scarier to me. Because what if it does become a reality? What if ServiceNow actually can't grow and Salesforce can't, again, I think it's so crazy to say that because at least for the next year, they're going to be growing. But what if in 2 years, it's not as great as we thought it was, and the software multiples fundamentally re-rate?
Buy Coca-Cola because nobody's going to stop drinking it.
Well, but that's literally what's happening, right?
Yeah.
Verizon, Coke, UPS, these were the stocks that were up today. They're physical things that aren't going to get sold off. I mean, let me ask you this question. You think Verizon outperforms NVIDIA by the end of the year?
It's got a good head start right now.
It's up 20. It has a 22% head start. Put in the chat, what do you guys think? Does Verizon out? That means NVIDIA has to get to at least 234, which feels like a lifetime away right now, to be honest.
Are we including the dividend?
No, I'm just doing it by 20% up or 20% down.
No, I think NVIDIA can outperform it. But look, people wanted to sleep on Verizon. Chris and I have been talking about this for a while. I mean, there's a lot of companies people are sleeping on because they're outside of tech. I just think the whole tech thing is overdone. But Verizon is actually still too inexpensive, in my opinion.
Okay, let's talk macro. I probably already know your answer on this, but I mean, in environments like this, are you a dip buyer? Are you being a bit more cautious? How are you? Do you still think S&P 8,000? Where are you thinking about macro in general?
Yeah, right now, I'm not changing my view on S&P 8,000. I mean, where's S&P now? 68.30, something like that? 68.20?
Yeah, pretty much.
We're still hovering around all-time highs. And once again, everybody wants to invest in individual stocks, yet they go crazy when you start getting a downturn. I mean, if you're in the S&P, you're not feeling shit right now.
That is a good point. If you're heavy in the S&P, you're really not feeling anything.
You're not feeling a thing. There's a bee sting. You have. I was just gonna say, have you seen Billions? I know you haven't, but
I have. Bobby Axelrod. I've seen it.
It's just like when they're talking about the whole settlement thing with Rhodes, and they start to, it's just a bee sting. It's an ant bite. I mean, that's what it is if you're in the S&P. If you're in SaaS or you're in Microsoft, you're feeling a lot of pain right now. But that goes with the territory of investing in individual stocks. If you're not willing to take the downside with the upside, invest in an index fund and go live your life. But is this painful? Absolutely. I just think that this is going to turn around. I think there's companies that are being treated unfairly. Maybe we need another quarter or two of earnings and good guidance for this to shape up.
But that's the annoying part. The earnings have been amazing, and
amazing.
Market doesn't care.
No, the market doesn't care about our feelings.
I wonder, February sucks in general. Do we need to get out of February? We need a good NVIDIA quarter. We need sentiment to change a little bit. We need this whole AI SaaS stuff. Maybe we need Jensen on the call on Wednesday to be like, guys, SaaS is not dead. I mean, maybe we need a little bit of that morale boost.
We got Benny off also on Thursday.
We do have Benny off on Thursday. Oh, Thursday is going to be, on Wednesday with NVIDIA.
Wednesday, you know what I meant.
Dude, Wednesday's going to be, because imagine NVIDIA's up 10 and Salesforce is down 10, which I think I could see that happening.
Yeah, absolutely.
Yeah, Wednesday's going to be wild. Wednesday's going to be absolutely wild. We really need Benny off to kind of shut down a lot of these concerns, but I don't think he's going to be able to. They're not going to put up the growth unless they actually really start growing again, but I don't think they're reaccelerating.
Well, he may not be able to put up the growth, but he can at least say that none of our customers are leaving. We have increased net dollar retention. Our AI products within the Salesforce ecosystem are being monetized. More people are opting for them. He can at least create a narrative where it's not all doom and gloom.
That is true. He could at least fight back against the broader argument around SaaS being completely dead.
I mean, look, here's the thing. Do we think Microsoft's going to 300?
I mean, if it does.
I mean, are we saying that Microsoft is going to be down 45% from all-time highs?
Dude, that's like .com level. I mean, .com was worse, but that's like .com level correction.
Microsoft is in a bear market right now.
Yeah, it's literally in a bear market, down 20% this year.
And if you look at its 52-week highs, what, 550 something?
553. Yeah.
Yeah, it's down like 31% from all-time highs, which was November.
Do you think we are setting up for a 2022 type of year? Or is that hard with rate?
I can't tell you that right now.
My answer is still no, because 22 we raised rates, 26 we should be cutting aggressively.
I mean, think about what you said. Do we really think that this is going to continue if you get 4 rate cuts? Do you really think that this is going to continue if we have positive GDP growth each quarter? I mean, this is not a bad macro environment. So it's just market volatility with uncertainty.
It's definitely uncertain. That's for damn sure. It is definitely uncertain. All right, guys, we'll stay on for another 10 minutes. If you have any rapid fire questions, put in the chat. We'll get Steve's quick takes on it, and then we'll be done for the day. But I think we're both pretty excited for NVIDIA. Steve, can you stream NVIDIA with us on Wednesday, or you have work?
No, I'll be at the office on Wednesday, but when I get home, you'll be on late on Wednesday, probably.
Probably, yeah.
So I'll get on when I get home.
All right, so we will figure out what happens on Wednesday. Thoughts on MasterCard, Visa, and American Express? They sold off because of stable coins potentially replacing the global financial system, which was in the Citrini article.
Once again, are stable coins issuing credit to people?
Nope.
There you go. This article it's so infuriating, and I call myself from saying it, but think about how infuriating it is. Does anybody have a credit card based on stable coins in their wallet?
I'm sure that product will be out eventually, but
okay. But is it out today? No.
Yeah. And again, I don't think the article deserves the flack, because the article wasn't trying to crash the markets. It was just a counter perspective. But the market literally took this article as like
truth.
And everything that the article said ended up selling off today.
I appreciate the article and giving us a different perspective to look at. And that's why I said to Burry that, I want to know where I'm going wrong. I appreciate it. I think that we're in a very dangerous market when any company or any individual can write something like that. And if it gets traction, the algos get a hold of it. I mean, seriously, do you think any individual investor sold American Express, or was it algos?
No, not even for a second.
It's American Express.
Unless
nobody's getting rid of their Visa card. Nobody's getting rid of MasterCard or American Express.
Damn, MasterCard was at 588 January 8th. Yeah, I mean, it's obviously been ugly. SoFi, any thoughts on the bank selling off?
Yeah. What the hell does that letter or this market over the past couple of days have anything to do with SoFi? The only thing you can say about SoFi is it's being classified as a bank, and now the market is truly valuing it off of its tangible book value. There is no other argument. That is the only one that makes sense because SoFi is firing on all cylinders. This year is going to be an incredible year. They're putting up tremendous growth, and they should benefit from a lower rate environment more than the traditional banks. So I think the sell-off in SoFi is crazy.
Zeta, they are tomorrow. Any thoughts on this company going into earnings?
I think they're going to put up great earnings. I think the guidance is going to be great. I don't think the market's going to care. That's why I didn't buy more than I did last week, and I'm saving a good amount of capital in case it goes to 10 tomorrow, or I should say Wednesday.
Yeah, the thing about Zeta is I don't think they're going to be profitable this quarter. I think they're going to get close. I think they're going to put up massive growth numbers. CEO's obviously been very confident about the earnings as he's been talking about it. But if AppLovin, which grew 65%, could not catch a bid. By the way, it was down 10% again today because that OpenAI rumor was proved to be false. JP Morgan put out a note today. I think that's why the stock fell 10. But even besides that OpenAI rumor, the stock fell from 450 to 370. I mean, I don't think Zeta is going to grow 60%. So if AppLovin can't catch a bid, you know, if MasterCard and Visa aren't catching a bid, SoFi is not going to catch a bid. Like,
yeah. Look, Zeta's got a lot of things going for it. It's just an unfortunate cycle right now that we're going through for Zeta. But the numbers look great of what they're doing.
So does AppLovin. They're growing EPS at 84%. And the stock is back to where it was 4 months before they got into the S&P. So I agree. The numbers on a lot of these names look amazing. And I don't think they're as easily commoditized by AI, but you know, they're in the SaaS bucket.
Yeah.
Why are you guys saying Zeta reports on the 20th? Oh yeah, 24th is tomorrow. Yeah. So it's tomorrow. Yeah, it'll be out tomorrow. Tomorrow we have Zeta after the bell, and then we also have Mercado Libre, Kava, Axon, another stock that got absolutely destroyed since the summer. It's down another 25% this year. I mean, realistically, the names that have held up this year are NVIDIA, which is flat, and memory. And there's a lot of other themes that are out there, but those are the core themes that held on.
AppLovin looks so inexpensive right now. I need to actually research this company now.
Dude, there's a lot of people on X that are diving deeper into AppLovin. I mean, there's like an AppLovin cult that is being formed because you just don't find growth that cheap in tech.
Can I bring up the growth rate?
Yeah, go ahead. Unless it's a SaaS name. Then it'll get that cheap.
Right. I mean, for 2026, the market thinks they're going to do 60% EPS growth, and then 28.5% and basically 29% the next 2 years. Trading at 26.5 times is not expensive, and with that much growth going forward, not expensive. And then on revenue, they're going to grow by 47% this year. I mean, this is very interesting.
It's very, very interesting. And it keeps giving people these opportunities. But, you know, I do think people are a little scared to buy the dip and then not get rewarded for buying it.
Huge free cash flow. Are they buying back stock? Buying back stock. Love that. What does the balance sheet look like?
I don't think they have a lot of debt.
$2.5 billion cash. Do they have debt? A little bit of debt, but they're not really levered. I mean, will they have them long term? Yeah, they're not really that levered. It's a market cap. 141 billion. That's why. So
on a price to sale basis, it's a little expensive. That's for sure.
On an earnings basis per share, it's not expensive, but when you look at the market cap for the profitability it looks expensive. So it depends on what you care more about.
You wrote an article on PayPal last week. I don't know if you saw the rumors today, but it looks like they potentially will get bought out. Stocks.
Yeah, I said they were going to get bought out.
So let's do a thought experiment. Put in the chat as well. who could be this mystery buyer that people think could buy PayPal? Or is the news fake and it's being pumped by some hedge fund that's trying to get out of their position? Because that happens all the time.
Could be fake.
And there was zero details on this headline other than potential acquisition.
This thing's up 8% since I wrote the article.
A lot of people saying Elon Musk, XAI, eBay.
Yeah, I got 2 thoughts on it.
Okay.
And one of them is not mine. So I'm going to give Tanner credit for one of them because I'm agreeing with Tanner. Amazon should buy PayPal.
I don't think that'd be crazy at all.
Because it'll decrease their expenses on the payment rails. The deal just makes sense at 40 billion market cap. I mean, deal basically funds itself. And you can probably generate huge amounts of margin expansion because you can probably multitask your current team and get rid of half of the team at PayPal. So that's 1. 2, I don't hate the idea of Elon buying it and rolling it up into SpaceX and XAI. I really don't hate that idea.
Elon also, for those that don't know, he made PayPal back in 2000. Yeah. So I mean, this would be a little bit of a coming back home story for him.
And I'm going to agree with something in the background. If Ripple buys PayPal, I will laugh so freaking hard. Oh my God. But I wouldn't be surprised if that happens.
What are your thoughts on crypto right now? Are we just stuck in the crypto winter?
I mean, bring up a 5-year of Ethereum. You had to expect that this was a possibility.
So 30% past 5 years.
No, just bring up a 5-year of it. Look at that. It's following what it does. Eventually it'll go back up. I mean, it's never not gone back up, but it always has a history of violent downturns. So this actually isn't even the most violent that's happened. So it's starting to replicate 2022.
Tanner says Affirm. I don't think that's crazy. If Affirm were to buy them,
That wouldn't be crazy.
But also, look, the stock's worth 40 billion right now. The shareholders are going to want a premium, so you're going to have to pay at least 60 billion, in my opinion, to get rid of PayPal. I don't think anyone's going to.
I don't know if you're going to have to. I think you can win over 51% of the vote, coming with a good thesis that because your shares convert into something else, you're going to make more money.
Okay, maybe that's how you could convince people. If they get like a firm stock, maybe.
Like you need 51% of shares to vote on this. If it gets brought to the shareholders and is not a board decision, if it's a hostile takeover, they may be able to get that going to BlackRock, going to Vanguard, going to State Street, and all the big institutional buyers and say, listen, no matter what PayPal does under the structure, it's never going back up. We're going to take them over. We're going to do a 1-for-1 exchange, whatever the exchange is. You will make more money having more of our stock than having PayPal as its own.
Do you know why IBM dropped today?
Part of it was because of what Anthropic put out. I need to look more into it.
I think that was the only reason, to be honest.
But
yeah,
a lot of it is geared toward their consulting services and some other things. So I got to look more at it.
Yeah, it's just every day now, it's another sector that AI is going after, which again, the thesis of that entire article and what we've been talking about is NVIDIA is the winner.
But let me ask you a question. Why do we think that AI as a thought, not a thought experiment, but AI as a new feature is going to wipe out and take out these companies rather than these companies harnessing AI to make their products 5 times better?
It goes back to what I've been thinking about all weekend, which is that I feel like the AI company, when we talk about AI, we're not just talking about the LLMs, we're talking about the foundation model companies that are, spending billions of dollars on compute to build the LLMs. They don't have a moat unless they control the end customer and put them into their ecosystem. So they don't want to just be the API you pay $1 million a month to. They want to own the $20 million per year enterprise contract with the end customer. And that requires building applications on top of the API that then gets seamlessly integrated within the enterprise. I feel like that's what's happening here. The market's realizing that's what's happening. And the market's asking themselves, all right, we used to give Salesforce a 50x multiple. Why should we do that? Like, why?
Maybe Salesforce isn't going to get the multiples that it did in the past. But why isn't it at least being thought of as an alternative that's realistic, that the following companies, Salesforce, ServiceNow, Workday, Oracle, PeopleSoft, SAP.
I think for the same reason that you're not hitting up a lady in the Philippines to make your thumbnails. You're just going straight to Gemini.
No,
I feel like
that's a valid point. That's a valid point.
That times 1,000 at scale for the enterprise, which is kind of crazy to say because, like,
but once again, why do we not think that these companies that are already ingrained in business and ingrained in the enterprise, why are we dismissing without evidence that they are working on AI products to make their products better, more efficient?
No, but you're right. They are. Like Salesforce, ServiceNow, they are using AI to become more efficient.
And why do we think that somebody coding on Anthropic is going to be able to make something better than what those companies can build out?
Because you were trying to replace me.
I mean, nobody can replace you.
No, the point is, if I maybe, and I'm not a big vibe coder. I really have to spend some time working with these agents and like spend some more nitty gritty work with them. But if people are coming up with solutions quicker than the time it takes to close an enterprise sales contract, just by telling their top engineers, hey, can you whip up something and see if we can use it? Oh, perfect example. One of, I think Rango here in the chat, he's in the chat right here. He messaged me a while ago. This is actually a perfect example for this. He has an investment fund, and I want to see if I can quote him correctly on this. Yeah. So Carta, for those that don't know, is a platform that kind of like, it's an investment portal. So if you like own shares of Anthropic, it'll be your SPV, your special purpose vehicle will go through Carta to be able to hold them. You have AngelList, you have a bunch of these things. He texted me a couple weeks ago, Carta used to be our biggest line item for the fund. We used to pay the most for Carta. We vibe coded our Carta replacement. Meaning they used AI in his fund to vibe code a replacement to hold all the documents and tax papers and all the stuff that is what's required when you're investing in private companies. And they don't need to pay Carta anymore. We're incrementally adding features to it. We're going to have KYC, compliance, lawyer portals, and even more. It took us 3 days. And guess how much AUM Carta has under management? $2 trillion. That to me is the perfect example for, okay, if someone can vibe code their own investment portal instead of using a 2 trillion AUM fund or website, then this could happen on a broader scale. Just like you trying to vibe code me out of existence.
Can you bring up one comment before we go? Elizabeth 6767 528. I'm not trying to ride the coattails of anybody. I'm allowed to disagree with people and ask questions. The same way that Burry does not have to answer me, which he hasn't. If you put something on a public forum, you open yourself up to people publicly asking questions. It has nothing to do with leaving the guy alone. It has nothing to do with gaining an audience. I could care less. If you actually look at what I wrote, it makes a lot of sense.
Let me translate. Steve wants the smoke, baby.
I'm not hiding.
The smoke.
I use my real name. I'm not hiding.
Yeah, look, even if you do want his attention, who cares, right? It's the fun of social media. Like, you're going after it back and forth. But this is Carta's website. And again, like, for someone to vibe code a replacement to this, it's kind of crazy. But to your point, Steve, like, because you work in corporate, you're not just vibe coding a Workday replacement. That doesn't happen.
No.
But what if more customers do?
And here's why you're not just vibe coding a Workday or PeopleSoft or an SAP. There's something called payroll. There's something called wage and hour. There's something called lawsuits when you do things incorrectly. The stakes are too high on getting something wrong. No company in their right mind is replacing that stuff with something that is vibe coded from their IT department or something that is vibe coded from a startup that has not been tested on a large scale. It's just not happening.
Well, what if they do?
Yeah, in a couple of years, maybe that ends up coming true. That's not today, though. And we can't prove or disprove if it's going to happen. The reality is that there are so many compliance issues and so many things around payroll that good luck getting rid of ADP, good luck getting rid of Workday, PeopleSoft, and SAP.
But what if Anthropic starts getting compliant and they, like
maybe they do. Maybe they do. I'm just not sure that companies are going to be willing to take that chance.
Like if you're a fund and you're using Anthropic's models for whatever reason you're using them for, and
keep in mind,
really
a fund has how many people working there?
Yeah, I mean, I'm using a smaller example than like
exactly.
But the point is, if Anthropic, if the models you're using are productive, and then they start upselling you on, hey, you have a lot of leads coming through. What if you use this version of CRM, for example, inside of Anthropic? Like, what if they slowly start building these applications on top of their model?
Sure.
And they hook you in, and it's cheaper because they don't need to have the excess cost of a sales force with 80,000 salespeople.
Absolutely. And for on the smaller scale companies, I said that that's definitely a possibility. But when you start talking about companies that have thousands and tens of thousands of employees, it's a much different game.
I agree.
Not to mention, it's not just, oh, Anthropic built this, it's 100% happening. You're talking about, for decision making, I'm going to explain something. When it comes to decision-making process, and it comes on authority levels of signature on a lease or an enterprise agreement, only certain people can sign that agreement. Every company has their thresholds. Most of the time, these types of agreements can only be signed by two people, the CFO and the CEO. And in most cases, things of this scale must get board approval, okay? The layers of bureaucracy to get something done is immense. Do you really think that these decisions will just be made because something gets made in the wild?
Not now, but I think bureaucracy is not going to last forever in the enterprise. If there's a more, like the earnings multiples on these stocks will warrant them having to cut through the bureaucracy and become more efficient. Otherwise, those stocks are going to zero. So not in the short term, but eventually it feels, but maybe we're wrong. Maybe it'll never be penetrated to the level we think it can get penetrated at, and the market is completely mispricing it. It's just the difference between this and DeepSeek. DeepSeek happened for about a week or two, and then it was over. Like NVIDIA stock was still struggling, but like there wasn't the fear that NVIDIA was dead. This SaaS thing has been going on for a month.
Have you seen the videos that are coming out of these companies now?
Which companies?
Just in general, like Bruce Lee fighting Mike Tyson and all these different videos. It's incredible.
Yeah, but again, that goes to show that like AI is not slowing down.
No, but it goes back to the hyperscalers. It's only going to get better. It's only going to get more advanced, and we're only going to use more compute.
Tanner said, did you use private companies that you invested in use Carta? My understanding is everyone uses them. Yes, most of the companies that I invested in privately use Carta. However, not only did I talk about Rango, who vibe coded an alternative, but one of those startups 3 weeks ago told me they're switching from Carta, and they moved to it. Now they didn't vibe code their own platform; they went to a different one. But apparently, the fees on Carta were just getting stupid. And once again, what if the fees on ServiceNow start to feel stupid to a small company? And they start to say, "Hey, we can do our own thing." Obviously, not a bigger company because they can afford it, but I feel like that's the concern. Amit, your job is safe because AI can't make jokes that bad. Thank you, Icy. I appreciate it. Is anyone else going to try to replace me like Steve? Or is that what we're doing? Or are we just going to make our own Claude bot and aggregate the news? It's a real thing though, dude. Like, what if people just start getting their news like that? What if, like, obviously there's an entertainment value and there's a chat. That's why people come to the stream every day. It's part of people's routine. But I mean, there's a world where people have replacements.
I tell you, I feel bad for the younger generation.
Oh man, that article, if you're reading it and you're 22, it's got to be such a depressing.
How about if you're 16?
Yeah. No. Well, I think what it is it's forcing everyone. There's this quote I heard over the weekend. It's forcing everyone to recognize the terminal value of yourself. Like, what is the terminal value of you? And that's a hard question because you have to ask yourself, okay, what can I contribute to society that is monetizable and valuable? And, if you're very young and you haven't really developed any skills yet and you're seeing, like, you have to put yourself into the mix of AI to feel that you can offer more value.
So I told 2 people today to get their kids subscriptions to Claude and have their kids just learn how to freaking use it.
I've come to realize I'm worth about 67 cents. Yeah, I think it's a good idea. Tanner says, I've been vibe coding a lot lately. It's actually crazy. You can create some pretty specific internal tools and 2 to 3 prompts to help your very specific business needs. Well, that's the promise of AI, right? Which is that all of us are going to get more productive. Like when Steve makes his thumbnails, it gets more people to watch the videos because it's a good thumbnail, and that makes the channel more productive theoretically. But it does reduce the necessity for that person in the Philippines who's an expert at making graphic design thumbnails. It puts them out of business completely. And I think the market is now pricing in the downside effect more so than the upside effect. Because the upside.
I mean, that's a great way to look at it because I would have 100% just paid somebody a monthly fee to make my stuff for me, but instead of paying somebody directly, I'm paying Gemini $20 a month.
Yeah, and that's.
And it's probably saving me a ton of money and time.
Oh, it's saving you so much money and time.
I mean, I would have just went to Fiverr and just found somebody and just paid them a monthly rate.
And again, this is the slowest and dumbest AI will ever be.
100%.
Do we think the optimistic creation of jobs narrative has a better chance than the doomeristic narrative?
It could. We don't know. It very well could, where this but it may only be the people that have imaginations, people that can think of new, because that's always been what it is. How did freaking SpongeBob? You know what I'm talking about from Shark Tank. Maybe it's not SpongeBob. It's freaking the whatever that Sponge Hero thing, whatever it is.
Yeah, I understand that.
You know what I'm talking about.
Probably knows what it is.
People that can come up with ideas for new things instead of businesses. Now it's prompts to create something. But even if you do, you still got to get people to buy it. So I don't know. I think we need Scrub Daddy. Thank you. I think that we need more people to take what Andrew Yang said seriously. And we need to have a very serious conversation about where we go from here.
Well, that's a good point. Creativity might actually have a much higher premium in the world.
Much higher premium.
Yeah, I mean, not being creative might be the hardest thing to be able to deal with.
Yeah, Love Star is right. AI is limitless. We have no idea what it can do yet.
Our kid will grow up in a world where BC stands for before Claude and AD stands for after Dario.
Oh, man. Did that just happen? That needs to be a t-shirt.
Before freaking Claude.
That will sell a million shirts.
With private debt, 50% in software and 50% levered, does a 20% drop from last year's average price trigger a systemic liquidation? Is this the hidden tech fuse? So that's a good question. If private credit is levered up on a lot of these SaaS names, and that's why Apollo, KKR is getting hit pretty hard this year. Same with Blue Owl. I mean, yeah, if Salesforce falls another 20, 30% from here, I think we're going to have some really big issues. But I would hope 30% down in 2 months is enough pain. We'll find out on Wednesday.
The problem with private credit is they have a lot of private, smaller SaaS companies that are starting to be cannibalized by these huge companies like Anthropic and OpenAI that are actually utilizing the data centers that they are investing in. They are effectively destroying their own investments.
No. Okay, before we leave, is there any stock that you are really looking at seriously right now that you haven't talked about?
No, it's the same stuff. I mean, look, if Zeta goes to 10 at this point, I'm going to double down. Otherwise, it's just Amazon, Microsoft, those two.
Amazon is one you're really pounding the table on here.
Yeah, I mean, to the point where the thought before I went to sleep, I'm laying in bed and I'm like, should I just dump NVIDIA tomorrow and put it all on Amazon?
Wow, that's how bullish you're getting?
I mean, obviously I didn't do it. It was just a thought before I went to bed. But I watched the entire Chris Camillo interview yesterday, and it just made me more bullish than I already was on Amazon.
Look, I like Amazon, but I think NVIDIA is going to outperform it this year. Like, I really do.
Absolutely. I'm not looking at just this year, though.
Yeah, I think for Amazon and for everyone who's like hearing about Anthropic all the time saying, how do I get exposure? It's Amazon.
Yeah.
It's literally Amazon at this point.
How much do they own of Anthropic?
About 15 to 20%.
Okay.
So when
and they're generating a ton of revenue from them.
Yes, and the Trainium chips, all that stuff. However, I think Amazon is a free cash flow issue, and that might take a year to change.
If Amazon goes to 150, I will sell NVIDIA and throw all the money into it.
What if NVIDIA is still at 190 when that happens?
That's fine.
I actually think that's bearish Amazon, because if NVIDIA doesn't fall with Amazon, it's like, screw Amazon, bro. It can stay over there. We're rolling with Jensen. But yeah, I feel you. I mean, if it really gets hit that bad, obviously it would be attractive. All right. That's it for us, folks. Thank you, Steve, for joining on a Monday afternoon. Steve will be live with Chris. Do you have a stock you guys are talking about today?
We're going to talk about NVIDIA and tech because we got NVIDIA on Wednesday. So we're going to do a little preview.
All right. So I'm linking Steve's channel right here. Please make sure to subscribe. We'll be live at, I think, 9:30, him and Chris. And yeah, we will obviously talk NVIDIA on Wednesday. We have the regular market, open market close tomorrow. Got a bunch of earnings tomorrow. Actually, a lot of earnings. Zeta, Mercado Libre, Axon, Transmedics, Tempest, HP, First Solar, Kava, Lucid, Workday. That's another big software name. So decent chunk of earnings. In the morning, you got Home Depot. So we'll hear a bit from the retailers. And then Wednesday, we'll have NVIDIA. All right. Thank you, everybody. Appreciate it. Hope everyone stays safe in the Northeast. Again, the snow has stopped from what I'm looking at, but still pretty ugly. And so hopefully that clears up by the end of this week as well. All right. Thank you, everybody.
Later, everyone.
Bye, everyone. Have a good one.